Today on the blockchain report, is Bitcoin reaching all-time highs? Stay tuned. And Michael Saylor YOLOs another $765 million in a Bitcoin because nothing says fiduciary responsibility like doubling down mid-lawsuit. The SEC admits they've been the villain this whole time, and now they want to regulate your meme tokens and your Tesla shares in the same app. And Texas officially goes full laser-eyed cowboy, passing a Bitcoin reserve bill that makes "Don't Mess with Texas" sound like a white paper. All that and probably a few lawsuits on today's show. Let's go! Good morning, my crypto psychos, leveraged lunatics, and everyone who still thinks NFTs are gonna make a comeback. So embarrassing, I bought some of those. This is the Blockchain Report, the only show where Bitcoin's the anchor, altcoins are a personality trait, and market sentiment swings harder than your ex after 3 margaritas. I'm Hank Hudson, live from the Bay Area, where tech bros are pivoting from AI to ayahuasca. The WeWork you're in was turned into a Web3 incubator, and someone's raising a seed round to tokenize their emotional support animal. It's Wednesday, which means time is fake, volatility is all too real, and the Fed still thinks you're the problem. Now, before we roll the charts, do the algorithm a favor, hit that like button and like it like it's airdropped yield in a bear market, and follow RoxomTV plus me, Hank at RoxomTV, on whatever platforms haven't rug-pulled free speech yet. So, whether you're watching from an iPhone taped to the underside of your desk, a co-living pod full of devs in denial, or your boss's corporate Wi-Fi because you work in Web3 compliance, stay locked in, because this isn't some recycled CNBC clip in a Discord thread. This is the Blockchain Report. Now let's see how the markets are moving this morning in our market rundown. Let's go. All right, let's see how the markets are shaping up this morning. And oh my God, Bitcoin is near all-time highs of 109,000 and we're all gonna be rich! I quit! I gotta finish the show. Sorry guys, I'm not rich yet. All right, we're gonna have to wait in the Lambos, but great start to the morning. Whew, let's go. We got Bitcoin sitting at just underneath $109,000. I'm bringing my down payments on Lambos for everybody. Ethereum also feeling the love right beneath $2,600 a coin. Let's see if that continues at all. Ethereum has been kind of just hanging around recently, not a lot happening. XRP sitting around $239 a pop. Cardano up 2.5% this morning. And Dogecoin up 3% itself. It is green, green, green all across the board. And we love it. We love it. Great start. In TradFi, much less exciting, but that's just kind of the nature of traditional finance. Am I right? The Dow Jones is down about 370 points this morning. The NASDAQ Composite's up a measly 22 points. The S&P is down about 0.3%, quite negligible. MicroStrategy, as we know, it goes where Bitcoin goes, and I'm a little surprised it's only up a percentage point this morning. I would expect it higher with new all-time highs on the horizon, but we'll see how the rest of the day shakes out. Tesla sitting at 343. Coinbase is up almost a little over a percentage point at right around 265 a share. Nvidia is up to 134, 135, and GameStop is sitting tight around that $28 a share level. We'll be right back with this morning's bull run right after this.
Security matters. Zappo Bank, the only way to bank your Bitcoin. Apply now at zappobank.com.
Yeah, Bill, it's all-time highs. I want the green Huracan with the black interior. I gotta go. All right, guys, sorry about that. It's an exciting day. We've got a lot to talk about. All-time highs for Bitcoin on the horizon, and we will be chatting in just a bit with one of my favorite people in the world and the man that can read the charts like no one else, Luca Pagano, who'll be joining us in just a bit. But first, I want to talk about our Lord and Sailor, Michael Saylor. There he is, you little guy. He's back at it, and he's doing what Michael Saylor does, and that's buying more Bitcoin, about 7,400 Bitcoin worth it to be exact. He dropped $750 million while most companies are still trying to afford free snacks for their interns. Now, according to a recent strategy filing, the company scooped up $765 million worth of BTC at an average price at just under $103,500 per coin, which is the corporate equivalent of ordering bottle service while your building is on fire. Their yield, year-to-date Bitcoin yield, it's at about 16.3%. Their legal exposure, though, it's also growing. Yikes, because in that same filing, Strategy disclosed that they've been hit with a class action lawsuit. Filed in the Eastern District of Virginia, the lawsuit accuses Saylor, CEO Fong Lei, and CFO Andrew Kang of failing to properly disclose how risky it is to YOLO your entire treasury into Bitcoin, which is kind of like suing a guy dressed as Evel Knievel for not warning you that he might in fact crash. There he is. Now, the plaintiffs claim Strategy misled investors about the anticipated profitability of their Bitcoin strategy and downplayed volatility risks. One DeFi developer, Ocnajami, it's an interesting name, called the lawsuit ridiculous, pointing out, you're buying a company that literally brands itself as leverage on Bitcoin. What did you expect? A CD with 3% APR? Let's talk numbers here, shall we? Strategy now holds over 576,000 Bitcoin. Their cost basis, about $40.2 billion. The current value of those Bitcoin, though, over $59.2 billion. That's an unrealized gain of $19.2 billion, or 47% for those of you who still think that fiat's the move. Meanwhile, Bitcoin itself is trading around 108, 109K right now, which is up well over 20% in just the past month. Now, other firms are catching Saylor's scent as well. A Bahrain-based catering company is now doing a Bitcoin treasury strategy. A luxury watchmaker renamed itself Asia Strategy and partnered with Sora Ventures to start stacking sats of their own. We're entering an era where your microwave might announce it's adopting a Bitcoin standard, for goodness sakes. And as a reminder, speaking of companies going all in on Bitcoin, I'll be at Vegas at the Venetian Hotel from May 27th to May 29th at the Bitcoin conference. So come hang with me and the rest of the laser-eyed degens out there, and you can use the promo code ROXOM for 10% off your ticket. That's ROXOM. Or you can actually go to our Twitter/X page at RoxomTV, where we are giving away 3 tickets to the conference. All you got to do is like and subscribe and do whatever else that Twitter thing tells you to do. And yeah, you can hang out with the rest of us, or you can just buy your own ticket and enjoy paying full price like some kind of no-coiner. I guess that's really up to you. So while all this is happening in Strategy, our Lord and Sailor, Michael Saylor, he's doing other stuff, including, there he is again. He's now tweeting corporate nudges like a Bitcoin hype man in a Brioni suit. This time, his target was Japanese firm MetaPlanet, who bought over 1,000 BTC just back in March. Saylor posted a chart showing MetaPlanet stock surging 10.6% in only 24 hours. Let's take a look. There it is. You got it a little highlighted there, but that's their stock currently. And he tweeted and tagged their CEO, Simon Garovich, with a subtle, "What up?" Now, which in Michael Saylor speak means, "Why aren't you buying more Bitcoin, you coward?" Now, Garovich responded with, "Bitcoin is the key, MetaPlanet unlocked." Which sounds kind of like something Gandalf would say if he were really into cold storage. Now, let's not forget here that MetaPlanet raised over $100 million via debt to fund their BTC buys, fully embracing the Saylor method of financial wizardry. Their current stash is at about 7,800 BTC, worth over $803 million. Which ain't too bad for a company that 6 months ago was best known for, what were they best known for? Not being MicroStrategy. So meanwhile, Strategy itself reported a 4.8% yield from Bitcoin this year, translating to a $2.7 billion worth of gains. But while Saylor was bragging about those numbers, the class action lawsuit we spoke of earlier was already hitting the presses. Strategy's stock dipped 2% in pre-market, but if you think that'll stop him, you haven't been paying any attention. Saylor's the man who's more committed to Bitcoin than most people are to their marriages.
Oh, it's beautiful, Hank. This is not financial advice.
Welcome back, gang, and we have our good friend of the show, Luca Pagano, with us. Luca, how are you?
Hey, Hank, how's it going? I'm sorry for earlier.
That's okay. There's never been a more beautiful morning to hear your not financial advice. We are excited. Bitcoin just tipped new all-time highs, 109.4. How are you feeling? How are the charts looking?
It's honestly beautiful. I think we've talked through this, bullish phase from breakout in the trend line. Remember, we said let's just coil push. We were coiling last week, and we're pushing again. And I think it's beautiful to see it and to talk about it with you, Hank. So thank you for having me.
Oh, it's always a pleasure. Now, Luca, between you and me and everyone watching, I'm ready to quit my job. Should I keep it, or should we be expecting more upside in the near future so I can go buy myself a used Lambo?
We've honestly had very, very strong momentum. So that is great always to see. Remember that, as per my view, at least, of course, this is not financial advice, but we should see some turbulence heading through the last high. Remember, we said there were probably lots of stacking asks around there. Also, lots of stop losses from shorts. These usually are, big volatility places. So it's good to have an eye on that. We may, punch the all-time high and then try to, punish a little bit the late longs or whatever to resume, ideally to 129. I've been loving that number all since 76 probably. So. Still eyes are on the price, but we need to be a little bit careful arriving into this area. We've seen this beautiful momentum movement, so I think it is very important to see what happens on here, where everyone gets very excited, and everyone wants to just market buy.
Mm-hmm. Based on what you've seen in previous cycles where we have hit new all-time highs, is there a trend that you have experienced that you see often happening? When we hit all-time highs, obviously, Bitcoin tends to jump into the news cycle. When Bitcoin gets in the news cycle, that is often the time we see a lot of retail traders start FOMOing in. So in this type of instance, do you think we could see a period of some short-term momentum and upside followed by some profit taking by more seasoned investors? And then on top of that, could this maybe be the catalyst for the altcoin season that we've been waiting for, as people take profits from BTC and then put it into some higher alpha plays? What do you think could happen here?
I think honestly that can definitely happen. If we see a little bit about, this is one of the charts that I am the most happy about, Hank. Remember when we were discussing about the negativity that there was in Ethereum relative to Bitcoin, which of course it's very fundamented with very, very, very high selling pressure. And we said, hey, I think, this was definitely an important psychological level, and we definitely hit targets that we had for this FBTC. For me, if we can, this will depend on BTC, and I'd love to lay some hypotheticals here because I think it helps on the market. Remember, we want to ideally plan a lot of the trades and see what we can trade according to our plan. So if BTC, for me, there are two ways we can see Ethereum play this course and the altcoins, of course, in general, right? So if Bitcoin is gonna start trying to reaccumulate in this zone just below the high, the all-time high, which I think it's very, very bullish, as we were talking about last week, because basically that is an indication of prices preparing to go higher, generally speaking, right? Of course, no financial advice, but if that happens, for me, the market should turn around and see a little bit of the place that we are expecting in terms of altcoins if Bitcoin decides to pause here. So for me, there are two zones where we could feel interested in altcoins. One is if Bitcoin does this, coiling in his price right now, just before all-time high, I would like to see pushes in altcoins. And the other one is us breaking the all-time high. All right, so just let me go to Bitcoin once again. The other thing that would be very interesting is us ideally just breaking all-time high into discovery, okay, and altcoins following suit. Just being pretty strong relative to the market. If we go to see the current dominance of Bitcoin, you see this very important retrace that gave us a good breathing in terms of Ethereum and of course other altcoins as well in the market. So I think that's very important to watch. What you don't want to see if you're an altcoin holder, ideally, is us going very much higher in terms of Bitcoin dominance than the 64, probably. Why do I say that? Because we had this rejection. Keep on rejecting, you usually would like to see a structure like this where you have the high and you have a lower high, and just continuing the downtrend. If that doesn't happen, I mean, for me, if we get above this the point we were basically last week, for me this is more Bitcoin time, and it will be beautiful to see Bitcoin just crushing everything, So that's something to be aware of.
And in terms of Bitcoin crushing everything, I love those words. I could hear them all day. What are we seeing in terms of volume, specifically with regards to institutional money and retail traders right now? As we've seen in the last couple of months here, it seems like institutionals really starting to hop aboard the train. I mean, just this year alone, I think I looked it up the other day, Strategy by themselves are averaging over the course of their buys, just in 2025, about 700 Bitcoin per day worth of purchases if you average it out, when there's only about 450 Bitcoin being minted every day. So is right now the rally being primarily driven by institutions, or are retail traders in there and we just don't know about them the same way because they're not making these gigantic purchases so regularly like Strategy or the MetaPlanets of the world?
I mean, I think honestly that's because you can see these both sides of the equation. So in terms of ETFs, let me just very quickly pop out this chart, which I think is great for us to visualize. Bitcoin's ETF historical holdings are getting higher and higher. This is just EBIT for us to see it clearly, but everything is trending up in terms of what we should expect from ETFs inflows. So that I think is very bullish. But if we come and see in terms of volume overall in exchanges, I mean, here we are with OKX. Let's put very quickly for us to see it together. Binance volume is relatively low in terms of what a breakout would mean, right? I mean, we've seen this pop up. We were bullish, Hank, remember, with the coiling and stuff, but I think also we need to be a little bit cautious in the sense of volume. So what I would like, honestly, and coming here basically onto our last line of defense for the bears, let's say, because this is the all-time high, right? We already did this push that we were waiting. That is beautiful. Maybe what you want to see is or a high spike of volume breaking this, or what I think is going to be a little bit more probable maybe is a really quick, mini flash crash, not flash crash, but you know what I mean, like just 1 to 2% down, just to trap a little bit of the shorts and get a little bit more gasoline, and then we can still head up to our current plans. I think that is a possibility right now, because you're with a relative low volume breaking out right now, and that's definitely not natural state of the market, but overall, of course, this is a beautiful structure and beautiful coiling and continuation plays.
Right. So right now, for all of our audience at home that may not know, the reason that low volatility, or excuse me, low volume could speak to high volatility is because any kind of big moves one way or the other then could have a greater impact on the market, right? Because there's less money in the market currently, right? So
yeah, and you're also heading into, remember, as we were saying, high volume action in terms of you will have a lot of participation breaking out the all-time high, because there will be stop losses, there will be asks, and there will be some nasty liquidations as well. So yeah.
So what do you think would be the catalyst for the next breakout? We've talked about that 120 number. Would it be maybe Bitcoin making this headline news? It's definitely going to be in the news cycles today. They always talk about Bitcoin seemingly in the general news when it hits all-time highs. So maybe people start getting in that FOMO state again, and people start giving a couple of their own shekels into Robinhood and purchasing Bitcoin. Do you think will the next big lift be more retail driven, you think? Because we've seen a lot of institutional adoption here in the last few months.
Yeah, I mean, I think we're honestly already seeing it, Hank. I think the highest measure of health and good news in the market is our actual companies buying treasury for Bitcoin, which has happened pretty actively the last month, probably, right?
Yeah.
And yeah, I mean, any event of either new companies, as we've seen in the last month, like 21 or whatever, comes out, I think is really helpful for momentum, and hey, a change happening right now where you see Bitcoin being taking serious of having a treasury, and that at the same time also, Hank, is very powerful because it communicates the other way around as well. I mean, is not having treasury in Bitcoin also is going to be a little bit of uncomfortable for probably, and that's what you want to see in a good snowball effect.
Right. So going forward, we just hit new all-time highs for like a second. Now we're flirting at that 109 area currently. What do you feel like is the new floor and the new ceiling that we're going to need to break through before we really see the next rally here? What are the numbers we should be looking at?
Awesome. Yeah, that's the question we want to know. We've always been handling this in steps, right? So for me, new step is above 106. As we were saying, this was a very difficult place to break. We want to hold that, right? So that's our floor for me. I don't want to lose $105,000, $106,000. And for me, the catalyst here, or the new floor, would be above $109,000, which is our all-time high. So I will be expecting probably some breakout in the next couple hours, maybe days, and test this area for good confirmation, so we can ideally keep on expanding, man.
Love it. Now, Luca, we got an exciting week ahead. We just eclipsed a new all-time high. If people want to follow you and your chart analysis as the week goes on, even if they're not here at the Blockchain Report with us, let us know where we can check those things out.
Yeah, let's keep it on the look at Roxom on Twitter, and also we will be talking again on Friday so that we can keep on analyzing this beautiful market together, Hank.
Keep on trucking, baby. Luca, as always, we appreciate your time. Love having you on the show, and we'll talk with you real soon, bud. Enjoy the all-time high day. Go celebrate.
Thank you very much. Bye-bye. See you soon.
See you soon. All right, we're back with more bull run. And in the Trump era of crypto, as we've seen this year, things move fast. Except, of course, when they don't.
You are
Since
fake
returning
news.
to office, you crafty bugger. Now, since returning to office, President Donald Trump has issued not one, but two executive orders focused on digital assets. One promised to make America the alpha dog of crypto. The other laid out a plan for a U.S. strategic Bitcoin reserve. You know, because nothing says fiscal responsibility quite like hoarding 200,000 BTC the government already seized from criminals. But there is a problem. Deadlines came, deadlines went, and the only thing released publicly was a wave of silence. A January order gave the feds until February, March, and July to do some paperwork. We are now in May, and there's still no final report. No guidance, no reserve, just vibes. Same story with the March 6th order. Agencies were supposed to identify current crypto holdings by April 5th and recommend new Bitcoin purchases by May 5th. Again, crickets. So now all eyes are on the two big dates: Trump's meme coin gala this week and J.D. Vance's keynote speech at Bitcoin 2025 next week, because apparently we live in a timeline where key economic policy might be revealed at the same event where someone's giving out NFTs of golden bald eagles doing bicep curls. Meanwhile, analysts at K33 are sounding the alarm. Don't sleep on the executive orders. They believe the strategic Bitcoin reserve is a massively underpriced catalyst. Also, they're bullish on Leo, Bitfinex's debt token. Now, Leo is tied to 94,000 Bitcoin that the US might return after the 2016 hack. Now, if that happens, 75 of those coins would be used to buy and burn Leo, giving the token a potential moonshot moment. But as always, this market doesn't care until, it really cares. And if you're wondering why Bitcoin keeps breaking 100K without fanfare, it's because everyone's too paranoid to believe that it's actually real. Which means that it probably, maybe, possibly is. Next, Robinhood is back, but instead of gamifying stonks for teenagers, they're now trying to reinvent capital markets. This week, the company filed a 42-page proposal with the SEC asking for a national regulatory framework for tokenized real-world assets, or RWAs, for those of us who live in acronym land. I love it there. Now, they want your boring old treasury bonds to live on-chain. And they're building an entirely new platform, the Real World Asset Exchange, or RRE, to make it happen. Off-chain trade matching, on-chain settlement, built on Solana and Base. Because when you're over-leveraging federal bonds, you want to do it on a blockchain that goes down less than Southwest Airlines. Now, their system aims for 30,000 transactions per second and sub-10 microsecond matching latency. For comparison's sake here, your Venmo request still takes 3 business days to hit. Now, Robinhood says their model could cut trading costs by 30% annually and shrink the capital market settlement time from T+2 to T+0. What does that mean exactly? It means you could sell your tokenized real estate and buy the dip on BTC before the Fed even finishes its next press release. Robinhood's CEO Vlad Tenev says that RWA tokenization is a new paradigm for institutional asset allocation, which is corporate speak for we're going to put your house on the blockchain and charge you less to do it. And well, they're not alone. BlackRock is tokenizing treasury fund shares. Libre wants to turn Telegram debt into blockchain bond fund. And in the UAE, a $3 billion tokenization deal is underway between Multibank Group and the real estate firm MAG. Now, tokenization is coming and fast. Whether it's Bitcoin-backed or blockchain-flavored TradFi, well, that's still up for grabs. But one thing's for sure, this ain't your grandmother's 401k anymore. Now, in other news, I need you to stop the presses. The SEC is no longer trying to crush crypto under the weight of 1930s regulation. They're now trying to merge it all under one roof. SEC Chair Paul Atkins is calling to unify oversight of securities and non-securities, aka crypto, under a single regulatory regime. Yes, the same SEC that used to invite crypto founders in for coffee and leave them with subpoenas. Atkins called that strategy what it was, a complete and utter failure. In his own words, saying, "Too often we responded with enforcement rather than guidance." He then pitched what could be the boldest pivot in SEC history, allowing registered entities to custody and trade both securities and non-securities under one roof. Meaning, your favorite crypto exchange might soon be able to offer stocks, bonds, and your favorite altcoin casino tokens side by side, fully regulated. Atkins even hinted at the endgame, saying this would be an initial step toward the possibility of eventually achieving a super app reality. A super app. Because who doesn't want to YOLO their paycheck into Tesla options and dog coins from the same user interface where they Venmo their rent? But seriously, this is a huge, huge shift. It marks a formal break from the Gensler-era regulation by intimidation model. Instead of treating crypto like radioactive waste, the SEC now wants to fold it into the existing system with lower costs, clearer rules, and fewer decentralized panic attacks. Atkins even gave a nod to Commissioner Hester Pierce, a longtime crypto ally, along with the crypto task force and staff at Trading and Markets, for helping push this whole thing forward. Now, before you get too bullish, none of this is binding yet. These are staff-level statements, like breadcrumbs on a regulatory trail. The actual rules are still being drafted, but for an industry that's been treated like a legal piñata for the last 5 years, this is the most adult-in-the-room moment we've seen from the SEC in, well, ever. The takeaway here, crypto's no longer being shoved into a securities framework. The securities framework is being stretched to fit crypto. And if that continues, well, the next bull run won't just be price-driven, it'll be regulatory. Because as it turns out, clarity is the ultimate catalyst. And Texas has officially yeehawed into its last haul and passed a bill to start stacking Bitcoin. On May 20th, the Texas House voted overwhelmingly in favor of Senate Bill 21, which sets the framework for the state to create a crypto reserve with Bitcoin leading the charge. Or in other words, the Lone Star State is going full Saylor here. Now the bill now heads to Governor Greg Abbott's desk, where he can either sign it, ignore it, or veto it and get steamrolled by a legislature that clearly already packed its bags for the Bitcoin standard. If signed, Texas would become the first U.S. state to actually fund a Bitcoin treasury. Sorry, New Hampshire, you were first in theory, but you know. The state comptroller will oversee the buying, holding, and potential selling of Bitcoin, because who doesn't want their public finance guy managing digital gold in between spreadsheets and barbecue breaks? Supporters say it's about fiscal resilience, hedging against federal spending, and positioning Texas as the leader in the digital economy. Opponents say it's a risky move that smells like a corporate subsidy disguised as a blockchain buzzword. And they're not wrong to be nervous about this. The bill did pass 105-23, but even some GOP fiscal hawks balked at the idea of spending taxpayer money on volatile assets. One Democrat, Representative Ron Reynolds, said the bill favored wealthy private investors and that crypto was probably too volatile to be doing so at a public's expense. To which Bitcoiners replied, "Have you seen fiat lately? Come on." Now, SB 21 doesn't specify how much Texas will actually invest in Bitcoin, but the Senate budget leaves the door open for real funding later this year. And if passed, it sends a loud and clear message. Texas wants to be the Wyoming of the South. Backed by the Texas Blockchain Council, the same folks lobbying for broader pro-crypto policy, the bill's passage is part of a national wave of reserve building. Trump already signed a federal executive order to explore a U.S. strategic Bitcoin reserve, and states like Ohio, North Dakota, and Arizona are cooking up their own versions. And Texas, well, Texas, it doesn't wait, it acts. Because nothing screams decentralization like a comptroller managing your Bitcoin cold wallet with a spreadsheet and a laminated oath of office. Now, finance professor John Griffin from the University of Texas, Austin, he had thoughts. He pointed out that Bitcoin was created to avoid government control, and now governments, they want in, which is ironic, but also extremely bullish. Because whether you're a laser-eyed libertarian or a state-level financial manager, everyone's quietly admitting the same thing. Bitcoin isn't going away. In Texas, it's already being added to the ledger. Pack your bags, you degenerates. Bitcoin is coming to Las Vegas. That's right, the Bitcoin conference is taking over the Venetian Hotel, May 27th through May 29th. It's basically Coachella for crypto bros, but with fewer flower crowns and more cold storage wallets. The biggest names in Bitcoin will be there. Will I? Maybe. Or maybe I'll stay home and live tweet it in my gold jacket. Either way, you should definitely go. And when you do, don't pay full price like a fiat clown. Use promo code ROXOM for 10% off your ticket. That's Roxom, R-O-X-O-M, like RoxomTV, the network brave enough to mix market news with memes and call it journalism. Now get on it and book your ticket today, and I'll see you there. Or will I? Welcome back. It's time for Blockchain Without Borders, and today we're talking about Argentina. The only thing vanishing faster there than the peso is accountability. President Javier Milei has officially dissolved the task force investigating the now infamous Libra crypto rug pull, the same token he personally promoted to his millions of followers before it cratered straight to zero. A bold move, considering the unit was barely 3 months old. It's kind of like hosting a fire drill while your building is still very much on fire. The Libra token, for those fortunate enough to have missed it, was effectively worthless before Milei gave it his presidential seal of approval via his X account. That shout out sent it skyrocketing to $5 per coin and a market cap approaching $5 billion before it promptly did what most meme tokens eventually do, and that's exploded on contact with reality. The crash triggered insider trading allegations, investor outrage, and a national credibility crisis. But according to Milei, it's not his fault. He told Todo Noticias, I gotta work on my Espanol, that he didn't promote Libra, he merely shared it, which is the same defense your uncle uses when he reposts fake news and gets called out in the family group chat. Tim. Now, Milei insisted he was simply trying to help entrepreneurs access funding, and that, sure, maybe a few people got burned on the way, but mostly Chinese and Americans. Only 4 or 5 Argentinians lost money, he claimed, which would be impressive if it weren't, completely untrue. Blockchain data shows that over 15,000 wallets dumped Libra at a profit or a loss of more than $1,000, and a whopping 86% of wallets lost money, totaling a combined $251 million in vaporized value. So yeah, slightly more than 4 or 5, Javier. Now, oppositional leaders are now calling for an independent investigation commission, saying the case is far from closed. But for Milei, the message is clear. He's trying to meme his way out of a $5 billion scandal, and apparently govern a country like it's a Discord server. Good luck with that, Javi. Now, in case you needed more proof that governments just don't understand Bitcoin fully just yet, Germany fumbled a multi-billion-dollar bag last summer by panic selling nearly 50,000 BTC at the bottom. Ouch! According to data from Arkham Intelligence, a crypto wallet labeled German Government, or BKA, sold 49,858 Bitcoin during June and July of last year. The average sale price, a tragic $57,900 per coin. Fast forward now, with Bitcoin trading over 108, 109K, that same stack would have been worth over $5.24 billion. Instead, Germany walked away with $2.89 billion, missing out on almost $2.35 billion worth of profit. And all because someone at the BKA hit sell like they were playing Fruit Ninja on a burner phone. The Bitcoin was originally seized from Movie 2K, a defunct pirated film site, which is a little ironic considering the real crime here was financial malpractice. Let's talk strategy here for a second, or lack thereof. Arkham CEO Miguel Morel said the German government's moves look like a desperate liquidity scramble. They sent BTC to 5 different exchanges and started market selling like it was going out of a business sale. No staggered OTC trades, no minimizing slippage, just no chill. Just a full-on crypto fire sale from the people running Europe's largest economy. The sell-off began June 19th with a 6,500 BTC transfer worth over 425 mil, and like clockwork, market sentiment turned very bullish. Because when the government starts dumping Bitcoin like expired bratwurst, it tends to spook investors. Then something magical happened. On July 14th, literally one day after the wallet ran out of BTC, Bitcoin bounced back to over 60K, almost like the market breathed a sigh of relief that the Germans had finally closed their tab. So to recap, Germany seized a massive amount of Bitcoin, sold it way too early, tanked the market, and missed out on billions of Deutschmark, which is a bold fiscal strategy no matter what way you cut it. Let's see if it pays off for them in the long run. Spoiler alert, it didn't, and it most likely won't. And Tanim Razul, who's the COO of the Canadian crypto exchange NDAX, has a message for regulators in the Great White North. Stablecoins aren't securities, they're payment instruments, and you guys all got it wrong. He said this at the Blockchain Futurist Conference in Toronto, which is like Burning Man for accountants, but, with more blazers and fewer mushrooms. Back in December of 2022, right after the collapse of FTX, Canada's securities administrators panicked harder than a no-coiner at a ledger dashboard and declared stablecoins to be securities and/or derivatives. Basically, they saw a digital dollar and said, looks like a stock, smells like a stock, let's regulate it like one. Razul, well, he disagrees, and he ain't alone. He pointed to Europe's MiCA framework as the blueprint for how not to fumble the regulatory bag. Over there, stablecoins are treated like what they actually are, which is payment tools, not securities, not derivatives, not the reincarnation of Lehman Brothers on the blockchain. Even as the Canadian regulators doubled down on their position in 2023, classifying stablecoins as value-referenced crypto assets. The crypto industry started giving them the cold shoulder. Binance bailed, Bybit ghosted, OKX, Paxos, Gemini, they all said, peace out, bro. It was the most polite crypto exodus in history. But here's the punchline. Canada's crypto market, it's still thriving. Revenue hit $224 million in 2024, and projections say it'll hit over $617 million by 2030, with an annual growth rate of over 18%. Which means, despite the regulatory chokehold, people still want their coins, their keys, and their caffeine with the side of blockchain. Meanwhile, stablecoins themselves are booming globally. The total stablecoin market cap is up nearly 52% year over year, currently sitting at $242.8 billion according to DeFi Llama, which sounds like a made-up site, but is unfortunately very real and incredibly useful. So what's the whole takeaway here? Canada is regulating stablecoins like they're penny stocks, while the rest of the world is using them like Venmo for grown-ups. And while US regulators are busy fighting over meme coins and campaign donations, and Canada's over there classifying USDC like it's an Enron rerun, Europe's eating everyone's lunch with clear rules and functioning markets. At some point, someone in North America is going to have to admit you can't regulate a digital dollar by pretending it's a banana. But hey, it's Canada. They'll probably apologize while doing it. Sorry, Nolan, we still love Canada. All right. right, welcome back. It's time we wrapped up today's show with a little bullish, bearish, or BS. Let's go over our top stories again and see how things are looking. First up, Michael Saylor's company dropped another 765 mil on BTC like it's happy hour in a bull market, then promptly got hit with a class action lawsuit for not warning investors that Bitcoin might be a little volatile sometimes. I'm bullish. I mean, if the worst case scenario is you didn't tell us it could go down, but you're sitting on $19 billion in unrealized gains, you're doing something right. Plus, strategy is still setting the standard for corporate Bitcoin adoption. Lawsuits be damned. So Saylor bought the dip, he got sued, but that's bullish behavior where I come from. So I'm bullish. Yeah, little guy. Next, Robinhood is trying to bring TradFi into DeFi with a plan to tokenize real-world assets like treasury bonds and put them on-chain for faster, cheaper settlement. Bullish, baby! I mean, when the meme stock app is asking to modernize the entire U.S. capital markets, you know the tides are turning. And this isn't just a flex, it's a sign that blockchain rails are becoming institutional grade, baby. Your grandma's bonds are going on-chain, and that is bullish. Too bullish, hot start. Next, Paul Atkins admits the SEC blew it with its regulation by subpoena strategy and wants to merge securities and crypto under a single framework. Oh, this is very bullish, baby. I mean, this is the first real olive branch we've seen from the SEC in literal years. If the same agency that used to treat Bitcoin like weapons-grade plutonium is now begging for unity, that's a regulatory signal that we have been waiting for. The SEC finally stopped yelling and they started listening. Big time bullish. Next, Texas House passed the Senate Bill 21, laying the groundwork for a state-run Bitcoin treasury. They're officially trying to out-Saylor Michael Saylor, and that is so bullish. I mean, it's not every day that a red state puts its treasury on a Bitcoin standard. The message is clear here, gang. Bitcoin's gone political and governments are lining up to adopt it. Next up, sovereign level FOMO. Texas is stacking, and that's bullish with a side of brisket, baby. And lastly, we have, after promoting the Libra coin that promptly crashed to zero, Javier Milei has now dissolved the task force investigating it, claiming that he just shared it. Oh man, this is total BS. You don't go viral for pumping a meme coin to 5 billion and then disappear like a Discord mod with admin rights. This is political deflection 101, and the victims deserve better. Short take, Milei, he's dodging this whole thing. It's total bullish. We'll see what happens there. This is a developing story. So today's scorecard: 4 bullish, 0 bearish, and 1 BS. So today is absolutely bullish. We got all-time highs. I'm buying a Lambo. Oh, I can't wait to get out of here and pick out my interior. Yeah, boy. So today, gang, from Saylor stacking to the SEC backpedaling to Texas buying Bitcoin like it's oil and guns, this isn't a market. It's a movement. That's your midweek reality check, my fellow DGens. As always, thanks for watching the Blockchain Report. Make sure to like, follow, and subscribe to RoxomTV and me at Hank at RoxomTV on all platforms that haven't rug-pulled Bitcoiners yet. I'll see you guys tomorrow, unless I've been subpoenaed by the SEC or asked to join the Texas Comptroller's Cold Wallet Committee first. Cheers. See you mañana.